Hello, good evening everyone. This is George from GettingMarketMoney.com and today's Currency Corner edition, Tuesday, August the 10th. Evening edition. The other one was posted really early this morning. And today we saw quite a dramatic trading day. For those of you that put some money on the line, you know exactly what I'm referring to. With the Federal Open Market Committee statement that was released. We'll get into that in just a bit. We'd also like to bring up the fact that it's turnaround Tuesday, and today is generally the day the markets tend to take a bit of a breather. They slide back the opposite way, lose some of the ground they've gained, and they've certainly done that today. They've lived up to their expectations. Dow, S&P, and NASDAQ all down, with NASDAQ leading the way down 1.24%. As at 11:13 p.m., we could also see the Asian markets aren't faring much better, down even 2% in the Nikkei situation. There are some concerns about economic growth, and it's not solidified as yet. It's still seen. There are still optimists and pessimists always, as with every trade. So careful out there on the Asian markets. I don't pretend to know them. I'm not going to give you in-depth information here. So, moving into it, as we see the chart here, as we always start with S&P 500, it's just bouncing around here. It's in a tight range, but a breakout is imminent, and we will see it test the 50-day moving average where the arrow is pointed, and at that point, we'll look to possibly short or look for an indication as to where the market's headed. Just a reminder, today's news was not very good, so if this breaks the downside, we fear it could have greater implications than just a little trend. It could unfold to be a bigger problem with which we'll have to deal when it arises. As traders, we don't really care where it goes, we just want it to go somewhere and make some money so we can go on vacation. Now, looking forward to the charts of the currencies, but before we do that, let's just discuss the federal statement at 2:15 that took place today. Bernanke said that they will hold the rate steady. That should not surprise anyone or catch them off guard. You should know that was the expectation. Furthermore, he said the central bank will reinvest principal payments on mortgage assets it holds into long-term treasuries, after judging that the pace of economic recovery is likely to be more modest in the near term than had been anticipated. To sum that up for you, we're not getting the economic expansion we expected once pooling in $1 trillion and getting those printing presses working feverishly. Doesn't seem to be taking hold. This recovery is faltering, and we definitely see that in the markets. So to make a long story short, they did not actually commit to quantitative easing expansion. They will not expand the monetary base. They won't print additional currency, but they did say they will take whatever action necessary to prevent a double dip recession. It is, of course, seen to be negative because the Federal Reserve is admitting that currently, what they had in plan is not helping the economy to a great degree. They've hit a little roadblock, and as a result, the Euro-USD surged 120 points. I mean, you could replay yesterday's video. I pretty much nailed it, hit the nail with the hammer, whatever you want to call it. It called about 100 points to the Euro's favor, and that it did. So we can see, nice little rally. And as soon as it hit the 132 level, I actually went out there and shorted it. Bit of a risk taker today, but sometimes it works in our favor. It's not a position I would have advised anyone to take, anyone sane that is, or anyone that dislikes a casino environment. And yeah, I mean, it worked out to my favor this time. It dropped right away several hours later, and it's now trading at the same point pre-release, which is usually what happens when there's a massive deviation to one side. There's a regression to the mean, as the statisticians refer to it. Tomorrow we'll see Canadian trade balance and USD trade balance. Canadian will come out from -2 to +2 billion. US will be -40 to -50 billion. Does that surprise anyone? Is that news to anyone? No. To me, it's just a yawn and a move forward type of gesture. We expect the government to be running deficits. Anyone that doesn't should probably have a cup of coffee or two and do some research. Furthermore, tomorrow there's going to be crude oil inventories and gas storage will be announced as typical on all Wednesdays. Look for resource plays tomorrow if that's your gig, if that's your thing. Myself, I don't get too involved with the oil stocks or futures. I know some of the clients that we speak to love those instruments. I personally don't have much exposure to them. So the aggregate is negative 1.9 million barrels. If it's less than that, that is, if it's more negative, look for bearish signs for oil, which, as we've seen today, held its ground, but it broke below the $80 level, which is not very good news for the technical guys such as myself. That's why, generally stay out of that market, to be honest. Oil tends to move relatively quickly and with very little, sometimes, catalyst. So it's one of those trades I just don't want my money in. Moving over to the Euro-Japanese yen, I just wanted to bring it up because we still have a position in it. As you can see here, what MetaTrader does, for those of you that haven't used the platform, the green line here, I should probably put up a green color. So you can see that green line, it's running off the screen. That green line right there is our entry, so we entered around the 112.50 level. We're riding a nice profit at this point, around $500 or so. And this is our advisory account, meaning whatever we say on the record here at Currency Corner, we actually execute as per this account. Good trade so far. We expect to see a bit of a retracement. At this point, it's oversold. And the retracement we're looking for is twofold. We'll add some units at just pull the line up a little bit. Add some units around here, which technically should be now, but we'll see how it reacts to this level. So instead of adding units, we'll see its reaction. If it's short term, then we'll ride what we currently have. But if we see a pop back up to the 38 Fibonacci resistance, that is Fibonacci of this movement, if we see it rally up to that point, we'll sell into it. If we see the 50, we'll sell some more units and look to get the 111.95 once again. If we get even just that amount, we consider this trade fulfilled, and the profit at that point should be immense. It should be building up. It should be a good enough profit for us as traders. I don't really want to speculate whether or not it will break that level. This trade did not start as a long-term trend trade. This was something that was a range trade. Once it retraces, it'll have a second go at that bottom at 111.95, and on that second go, personally, I don't really care where it goes. I'll be closing the position out of safety of capital. Remember, it's very important as a trader to not lose your mental capital. Your balance is compromised of two parts, mental and gain, right? The mental capital is something you must never, under any circumstance, lose. If you're losing money that you worked hard to make, put it to the account, you should stop and rethink your strategy and back test a little more, do some research. The reason I say that, I had a few inquiries, etc., but it's a whole different story. I'll leave that on a side note. And actually, I'll leave the day here with one last chart. GLD. This is a gold ETF. I just wanted to point everyone's attention, to the fact that it's a bullish engulfing bar today on the daily, and this to me indicates strength and momentum. I still expect to see a drop to possibly 116. However, at this point, on the break of the 50 EMA, I will actually go long myself, as we are actually approaching seasonality in gold strength with Diwali and the wedding season. So on the break of this, I'll look to go long. I'll keep you informed. Right now it's a no trade, it's neutral. We'll keep it there. And we're just about at the 10-minute YouTube mark, so have yourself a great, fantastic trading day. Good luck, get the market money.